Now, the markets after Wednesday's crash, most of us had turned cautious and had expected to, the markets to remain choppy for the remainder of 2023, but good bounce back. Do you think we have that one final, the last hurrah left to make that 22K perhaps?
Definitely possible. I think, what's happening in the market is a stream of good news coming continuously. After last Wednesday's crash, there was a lot of skepticism in the market, but the market sharply started recovering from Thursday itself. And towards the last weekend, when the news came of US inflation numbers, and they were benign and much better than expected, I think the global investors cheered that with a rally in US markets. There was a follow-up of that yesterday in India when the markets opened, and many other Asian markets. Leave aside China, because China is a different market altogether now. But most of the Asian markets were up, and so was India. And I strongly believe that the momentum is and will continue in the foreseeable future. Also remember that there is enough and more liquidity in the markets, both international as well as domestic. We have $2 billion plus coming every month as incremental SIP. We have FII's money trickling in, but a lot of FII money is expected to come in. This is a lean season for FII investment, so probably it's a trickle. But probably once things starts opening up in early January, we will see a flood of FII money coming in. So expect newer highs in the indexes. Yes, there will be a bit of a turbulence here and there. Profit booking at record levels may come. But after that, I think things will consolidate and start moving up once again.
Now, Mr. Bandyopadhyay, hearing you, it looks like India's situation at least looks too good to be true. Any threats that we need to be cautious of?
Well, geopolitical situation is always a threat, and that is completely unpredictable. Last week, if you had asked me, I would have told you the oil prices are in the 75-80 range, dollar per Brent barrel. But as things stand today, you never know which way the Red Sea conflict will move and which way the Suez Canal passage will, remain open or not. So there is a lot of concern. We were talking to the exporters, and the freight rates between India and continental Europe has doubled. So obviously there is a lot of pressure. Oil prices can move up even further if the conflict persists. So we have to be cognizant of this geopolitical tension, which I think will have a result of oil prices shooting up, and that definitely has a negative impact on Indian markets and Indian economy. But if you leave aside the geopolitical stress for the time being, based on sheer demand-supply scenario, oil prices should remain benign, and they should be in the 75 to 85 range, which is absolutely fine for India.
All right. And do you think that COVID, because COVID is picking up once again, do you think that could be something that we'll need to keep a track of?
I don't think so. I think, multiple authorities, including WHO, has come out and made a statement that this is one other kind of fever. And, this is not the obnoxious variety of COVID, which will have a significant impact on human health and mortality. So I think we should not have too much of stress. At some stage, there may be some vaccination may be recommended and things like that. But I don't think we should get too perturbed. This is just one other kind of fever.
All right. Now, sir, the primary market is buzzing, and in fact, one of the stocks that was supposed to be listed today, Happy Forgings, has listed at a premium of about 18% or so at over 1,000 rupees. But we have Credo and RBZ Jewelers also listing today, and good gains are expected from both the counters. Between the three, which one would you recommend for long-term investors to hold in their portfolio?
Well, I think consumption is an evergreen theme, and we have seen what's happening to the consumption stocks. So both Credo and the jewelry companies should do well. Credo predominantly on the back of the brand strength and the growth of the brand. Jewelry companies all over are doing very well. We expect them to continue doing well. So these two companies should do well. But I would definitely recommend investors a bit of a caution not to rush into and buy today itself. I think they will and are at elevated levels on listing. So maybe wait for things to settle down before they get into buying these two companies. As far as Happy Forging is concerned, this is the fourth largest forging company in the country. But being a company in the core sector, I think there will be appreciation. It's a good company, but you can't expect abnormal price increases like what's happening in consumption and other themes.
All right. And as we speak, Credo has in fact disappointed on its listing. It has, listed at a premium of just about rupees 2 at 282 per share versus the price of 280. RBZ Jewelers, on the other hand, has listed on a flat note, in fact, at rupees 100, which was the upper band of the IPO price. But sir, as we are drawing curtains to 2023, what is that one company that got listed, let's say in 2023, or even if we do not limit ourselves, let's say since COVID, that could be, a multi-year wealth creator?
Well, Tata Technologies is definitely one company which one need to look at. It is a fantastic business, has been doing well, and definitely can be included in an investor's portfolio. I would like to mention one more thing, that as opposed to last year's or 2021, 22 listings, current year's listings are distinct. These are mostly profitable companies having an established track record which has come for listing. So I am positive on the current crop of companies which got listed. Whereas if you compare with the last year or the year before's listings, most of them were loss-making platform companies, new age companies, and they came with unrealistic premium levels. And there were major disappointments post-listing as far as investors are concerned. So I suspect the market has given a very valuable lesson to guys who are wanting to list. That is, pricing has to be reasonable. I'm not saying loss-making companies can't get listed. We have Ola Electric coming for listing, hopefully sooner than later. But the pricing has to be realistic if you want to make a success of the listing.
All right. Now, sir, once we are back from that New Year vacation, we'll have December quarter earnings. Now, what are your expectations, broadly speaking, from the December quarter? Because, in the last two quarters, we had seen a trend, and that was a decline in demand, especially from at the bottom of the pyramid. Do you expect a significant departure from that trend, given the festive season was also there in the December quarter?
Yeah, absolutely. I think we will start seeing recovery in rural demand from Q3 itself. I'm hoping that Q4 will be even better, and that trend will definitely be visible, that demand recovery in rural India is happening. And the beneficiaries obviously will be the companies having significant rural exposure. In the FMCG space, companies like HUL, Dabur, you will see reflected in their volume numbers.
All right, but sir, the last time around, the commentary from HUL that indicated that they are facing, challenges from local players in smaller markets. Could that persist for this problem persist for these big FMCG players like your HUL?
This has been, we have seen this movie many times, multiple occasions over the last, 4 or 5 decades. We have seen local players coming and challenging the multinationals or established companies with upstart brands. There has been turbulence for a brief period, and then things settle down. I'm not saying the local players are bad or they won't have market share. Everybody will find their own niche and grow. The demand in India is huge. And I think, organized sector meets only a fraction of that even today. So the scope for growth for an, organized small local player is there. And definitely there is significant growth opportunity for, large organized players like an HUL or a Dabur or a Marico.
All right. And sir, as we know, 2023 was a year for PSUs and realty stocks. In 2024, what sectors could steal the limelight?
Well, construction, infrastructure, these are the two sectors which are our favorite, and all pretty much related sectors. So whether it's a building materials, whether it's cement, will be our favorite in 2024 as well. There is a significant tailwind. There's enough and more government capex happening. Private capex is also starting as things stand today. So the construction companies are getting orders which are, they probably have 4 or 5 years worth of order book already accumulated. Uh, as far as other sectors are concerned, defense continues to get fresher orders, newer orders. But my only submission here is that the valuation of most of the defense companies are at a level which is, I think, fully priced or maybe a bit on the overpriced region. So investors need to be a bit cautious as far as defense companies are concerned. They will continue to perform well, but the price at which they are available is bit stretched.
All right. And before we let you go, if you could give us your, 3 to 5 stock picks for 2024 as well.
Well, from an investor point of view, I think I would recommend them go and buy some of the frontline stocks which are still available at attractive valuation. Reliance Industries is the first name I will recommend. The second name will be Larsen and Toubro. I think both are fantastic companies doing very well. They have their own set of triggers for upward movement from current levels, but both are worth buying. As far as the BFSI space is concerned, I think it's a very safe bet to buy SBI at current levels, and so on. So is Bank of Baroda and PNB. I think these three PSU banks can be bought at current level. We expect some substantial gain from these levels.